B, discuss, so look at the word, discuss the VAT implications for issue 6 and issue 7 for Mike. Clearly indicate whether the VAT is input tax or output tax. Also indicate the specific date on which input tax can be claimed or on which date Mike becomes liable for output tax. It will not be sufficient to only state the tax period. If there is no input tax or output tax, clearly provide explanations. Right, so issue 6 and issue 7. So guys, let's talk about it. The solution is obviously one I wrote, so I'm not going to rewrite everything for you, but we'll go to it. So let's talk about issue 6. So issue 6 is where we sell this building in that we saw discussed in issue 5 already. Now, remember again what is important about this building. First up, whenever we have fixed property, the general fixed property rule says in section 9.3d, it's the earlier of registration or payment. So that's when the VAT Act says it actually takes place. But section 16 is the section that tells us when we can actually, or when we need to actually claim it or pay it. So the first thing I just want to show you is always put down that the time of supply in section 9.3d. But section 16 is the one that overrides it. Okay, so this is in the solution, obviously, guys. Now, when we sell it for 2.2 million rands, we will calculate output tax on the full amount times 100%. That's important for you to see, because output tax is always at 100% except for indemnity awards, fringe benefits, change in use. However, we only claimed 70% of this originally, so we have to claim extra input tax under section 16.3h. So let's go and see that in our solution. So output tax must be calculated because we're selling it. Output tax is always calculated 100%. Right, section 8.16. So the general rule, section 10.2 is considered. Remember, you have to discuss definition, timing, value, special rule. Okay, so timing is the section 9.3d, special is the special timing rule, value is the value rule, which we discussed here. Right, so there we calculate it. Then, because we didn't claim 100% of the input tax, we have to apply section 16.3h, which says calculate additional input tax on the lower of the cost, 1.8, open market value. Right, so there we claimed an additional 30%. When do we need to account for it? That was the value, or the timing in the value rule. The timing rule says earlier of payment registration, but there's a special timing rule in section 16, which says in section 16.4, you must account for it to the extent that payment has been received. So, if you go back to the question, the full amount was received on the 27th of May. You look at when the amount that you've received, the seller has received. So because the full amount was received, that's when we account for output tax. It was in May, and that is in the June VAT return. Okay, that's it, guys. Issue number 7. So first up, the personal residence. There's no VAT that you can claim on that. It's not for tax purposes. Then we have the workshop. Okay, so this is bought from a second-hand goods from a non-vendor, so we claim notional input tax. Okay, so all of the notional input tax rules, let's just go and talk about it. So notional input tax, remember, it's claimed on the lower of cost or open market value, that's the value rule. So that's what we will claim. The timing rule is again, because this is property, section 9.3d, but because this is also second-hand goods, everything we see in section 16.3 overrides it. So there's two sections, section 16.3a, IIAA. This is the section which is applicable to all second-hand goods from non-vendors. So that's the one that says claim it to the extent of payment. But section 16.3a, IBBA tells us that you can only claim it once it's been registered. So in this case, the property is registered on the 15th of July. At that point in time, we had already paid a deposit of 500,000 Rand, so we can claim that then. The rest of it we claim on the 20th of July, and we can claim the input tax on that amount at that point in time. So there we tell you 500,000 on the 15th of July, and the rest on the 20th of July. The one in July is in the August VAT return. The one on the 15th of July is also in the August VAT return. And that is it, guys. So very standard, very popular also, that we often see in tests at this point of the year. So we'll continue with part B of the required in our next recording.